Hi, this is Sean Hyman from mywealth.com, and I just wanted to talk to you today about some of Russia's latest woes that they're having. Could Russia default on its debt again like it did in 1998? Well, today Fitch downgraded Russia's debt, and they did the same thing in 1998. 1 month later from when they did this in 1998, Russia defaulted upon $40 billion worth of debt. So it's kind of a historic reminder that we could see something similar play out again. Does it mean it has to? No, but it certainly could. So let's look at some of the reasons why they may have downgraded their debt. The Russian stock market, particularly the RTS index, just continues to plummet. It's leading the world markets downward. The reason why I say that is because most of the world markets are trading sideways at present after having gone through a long downtrend. They could break lower, but so far they have not yet. Russia has led the way and broken its recent supports and headed even lower. What else do we have? We have the Russian currency falling. Now on this chart it looks like it's soaring, but actually what you're seeing is the USD/RUB pair. So that's the dollar versus the ruble. So as the ruble plummets and crashes, it throws this pair upward parabolically. And so you can see the dollar just gaining precipitously upon the ruble as the ruble just comes crashing down. And this has just been enormous because there's a huge erosion of wealth here. So you're getting caught on two fronts: their currency and their stocks. Commodities have crashed. Why is this important? Well, they are Russia is the world's leading energy resource to the world. They are huge in natural gas and oil in particular. And this is a 3-year chart here just showing how badly that commodities have crashed and how much demand destruction that there's been. Well, when things were flying high, their profits were soaring and their profit margins were fat. But now that commodities have all but crashed, those profit margins are gone and they are hurting. So just one more reason why Fitch may have done this. It's also eroding their balance sheet. 1/3 or $210 billion of their currency reserves are gone just since August. So they have been trying to defend their currency and slow the descent of the ruble, and that's what they've had to pony up to pay that price. Formerly, they also had the world's 3rd largest reserves. Of course, they're not in that spot now due to all these billions going out the window. So investors also have felt this negative sentiment and pulled tons of money. Actually, $290 billion has come out of their capital markets. So between these two numbers, you got $500 billion that's gone and been erased from Russia's balance sheets right there. So here's why you should care about what happens in Russia. Even if you don't invest directly in Russia, its ruble, or any of its markets, here's why. If the downward spiral doesn't stop in Russian stocks and currency, it will have a spillover effect eventually in other markets that do affect your investments. This ripple effect has been seen before in Argentina when it defaulted on its bonds, the Asian contagion that happened, and these things like this can happen once again. So this is why you need to take note of what's going on there, because it could spread to other places. So just to sum things up, keep an eye on the Russian stock market, especially the RTS index, and the Russian ruble, particularly the USD/RUB currency pair. Also watch the price of oil, because Russia has warned that if oil goes to $30 a barrel and stays there, it could pose even greater stresses on their energy-dominant economy. Also, I'd like for you to just check out our website at www.mywealth.com. Check out our free blog there, our inexpensive online courses that come with live instructor interactions. And thanks so much for watching.